What if I told you there are only 3 moves you need to build a $100 million company? And the truth is, most founders chase hundreds of strategies when all you need is Q, Q, and Q. Hey, my name's Arjun. I'm the founder and CEO of doola.com, a business in a box for e-commerce. We're a venture-backed startup in New York that's raised over $13 million. And today, I want to break down the QQQ Framework, which is the exact strategy we followed to scale Doola from zero to $100 million valuation and work with over 10,000 businesses from over 175 countries. When we started Doola, I made classic mistake after classic mistake. And the way I'd summarize this is shiny object syndrome, which everyone faces, but it is so easy for a founder to face this, where everywhere you look, there's opportunity and you want to serve everyone. So by serving many people, you serve many people mediocrely instead of a select group spectacularly. And I made every single mistake in the book where I'd see a shiny object and I'd stop doing what's actually working and go chase the new shiny object and do a little bit there and then go chase the new shiny object, kind of like a dog chasing a tennis ball, if I'm going to be real there. So here's the thing. We were growing. We've always been growing. But the truth is the growth was linear versus non-linear or exponential. And imagine working 50, 60, 70, 80-hour weeks where every week it just feels like you're pushing the boulder up the hill. And any week that you ease off, growth slows down. That was the reality, and that's kind of how it felt, just chasing these shiny objects and not really having the right strategy or framework in place. Then everything changed in this one conversation I had with one of our biggest investors. And quite simply, the question they asked is, are we a linear growth business or a non-linear or exponential growth business? And what that question did to me was say, wait a second, what are the things we are doing that have non-linear potential? Meaning, it works for you when you're done working. You put in 1 unit and potentially get back more than 1 unit. And that's when it just hit me in the face. The answer was right in front of us. But because I was chasing shiny objects left and right, I wasn't focusing on the non-linear profitable growth channels. And then when we looked at what was actually working, it was very clearly 2 things, partnerships and then word of mouth, which was coming from a lot of content. So quite literally, it became, instead of chasing 50 shiny objects, why don't we just do more of what we're doing and do it better? And with that in mind, I restructured our entire business strategy around what I call the QQQ Framework. And I kid you not, with this new framework and focus in place, we hit back-to-back all-time highs in revenue month after month after month to start off the year. Now I'm going to show you how you can exactly do the same. Let's break down the framework. The first Q in the QQQ framework is quantity. Quite simply, quantity means do more of what you're doing. So I'll give you the example with Doola. What we saw was working was partnerships. So instead of trying to crack a different new channel, why don't we just do more partnerships? Activate more partners, have the partners create more content, have the partners creating content that's working, do even more content. Try different formats with the partners who are doing content that's working. There's so many things you can do more of, which don't include chasing this new shiny object. The second thing is we kept hearing from people saying, hey, I followed you on LinkedIn, or I saw your post on Twitter, or I binged your YouTube videos. Shocker, why don't you just do more of that and maintain the quality bar, but just do more of what's working? Instead of, again, trying to crack 52 different channels. And I keep repeating that because it's so easy to get distracted saying, hey, let's go do that new thing, when the truth is just more quantity and doing what you works is right there. And our partnership channel had really good paybacks, 3x to 1 at time of initial purchase. And content, to me, is the best form of acquisition because it effectively has a $0 CAC. You create it once and you can replicate it infinitely. And the only CAC is the time it takes to create the content. So you have the fixed cost of obviously the team creating the content. But once it's out there, anyone can see it. So here's the takeaway with the first Q or quantity. I would bet the answer is right in front of your face. Just really zoom out, look at the actions or the inputs you're doing and ask yourself, what can I do more of? And just do more of it and do a lot more of it. At least 10x, but I would say 100x. And then even if you only have 1 conversion coming in for every 100 inputs, if you 10x that, you should get 10. And if you 100x that, you should get 100. The answer to growth is probably right in front of your face. That's the first Q, quantity. The next Q in the framework is quality. Now here's my favorite story about quality. There was once a pottery class, and the professor said to one half of the class, all you have to do is create 1 pot by the end of the semester. Just create the best pot and submit that to me. The other half of the class was told, create as many pots as possible. Quantity is the goal. You're going to submit as many to me as possible. Guess which half of the class made a better pot? The class that created more pots because quantity has a quality of its own. So that's why it's the first Q. By doing more of any input, you're going to realize what works because you have more sample size you've seen and tested. But the next Q is quality. So just because you're doing actions doesn't mean it's going to work. Effectively, you can't throw crap at the wall and hope it sticks. You have to throw non-crap at the wall and that will stick. So the Q is important here because you can then take a process that's working and do it better, improve the quality. So I'll give you examples with doola. When it came to our partnerships motion, we took our partnership process, and before I had a 3-minute Loom video that I recorded to explain the process, we filmed a high quality video that was produced and edited that looked really high class. So it builds more trust initially. We took our overview partnership process and we turned it into a very high quality designed pitch deck that we can then send out even before a partner chats with us to understand the end-to-end process. Those are quality improvements which are added once we have the quantity going. But the truth is we didn't know we could make those improvements until we had more quantity. So you have to start with the quantity, then you can beef up the quality. One more example when it comes to content. Before, we had a very lean social/video content team. But when we realized content was working, we made dedicated hires to lead video production, to lead social media management so that we could have more specialists versus generalists. And that allowed more time and focus spent on content, which meant higher quality content. So not only are we able to put more content out, which is the Q, quantity, but the quality of the content increased too. So we went from recording in a dark room with a crappy camera to a much better setup like this or other setups around the world where we filmed content. So that's the second Q, quality. Remember, you don't really have to look elsewhere. Look at exactly what actions you're doing that are driving the outcomes you want for your business. Do more of it, or just do exactly what you're doing, but turn the dial up on quantity. And the final Q is quest. Quest here is doing something new, going on a quest. Now, the reason why you should do this last is because the opportunity cost of doing something new is huge. It's untested. You don't know if it's going to work. You're putting resources towards that thing. So out of everything on the potential table of options, you should actually not be going on too many quests. You should be going on quests. That should be part of the portfolio. But too many times, and this is the mistake I made, 80% of the portfolio or the bucket was quest versus 80% being doing more quantity and more quality. So a quest in doola's example would be, hey, we realize we're working with a ton of e-commerce founders and we have access to their bookkeeping, transactions, and their financial statements. Why don't we integrate with more ad platforms and we can help them do e-commerce analytics? Well, we combine very powerful sources and provide analytics and cuts that no one else can because we have their bookkeeping and tax data and we have their analytics data such as inventory, ROAS, profit, etc. So we went on a quest and we built a new e-commerce analytics offering, which we added to our business in a box. Now, we did that because we saw there was a need in the market and we felt like we could bundle this in a differentiated manner. But at the end of the day, not everything should be a quest. It's so easy as a founder to get distracted again by these shiny objects. And I think shiny objects are naturally quests. So what I would say there is you should be going on quests because you always want to be thinking what's new, but make that a much smaller portion of the portfolio. And that's a wrap. In summary, the QQQ framework, which is what I think about, I eat, sleep, dream, think about it at doola now, is quantity, quality, and quests. First, am I doing enough quantity? Or as a business, are we doing enough of the inputs? Let's just do more of those if it's working. Then we have to maintain the quality bar, but can we make the quality even higher? And then the third bucket is quest. Is there anything new that we think we should create? And the way I think about it in terms of buckets is quantity and quality probably takes maybe 50 to 80% in a given quarter in terms of initiatives. And then quest is about 20%, but sometimes it can be even less. Sometimes in a quarter, we're not doing anything new. We're just enhancing, which means improving the quality of what's here or doing more. That's a wrap. I hope you enjoyed the video. The QQQ framework has worked for me. I'm going to continue to follow it, and I hope it helps you level up your business. If you have any questions as well about leveling up your business with confidence, that's why my company Doola exists, to support you with formation, bookkeeping, and taxes from anywhere in the world. So if you're looking to launch your level up, head to doola.com where you can get a demo. You can check out all of my free ebooks and guides down below as well. And please comment if you have any questions. Thanks so much for watching. I'll see you in the next video.